Dear smart money traders, I'm sorry to burst the bubble. SMC is retail. Yes, you heard me well. Your order block, your breaker block, your mitigation block, and your fancy change of character are all retail concepts. Here is why. I've been in the Forex market for so long, this industry, and I've read so many books, watched so many videos, and undergone a lot of study. And one thing remains the same. We all trade alike, just that some have an edge while others do not. Okay, in the forex market, a lot of people tends to repackage what is already out there and then rename it and call it something else. Okay, it is not new. I'm going to show you in this video why the order block, your breaker block, your mitigation block, and your change of character chalk is nothing new in the retail world. It's just that with a little blend and a little spice up, just that with a little twist, you can put all this into your favor and trade with an edge in the market. Okay, without wasting time, let's look at the breaker block. Okay, now the typical breaker block is this. For a bearish breaker block, we have something like this. Okay, so the last down candle before the move up, right, is a breaker block. Okay, yeah, this is a breaker block. Okay, it went up, broke this high, then it moved down. So to trade the breaker block, traders simply short from here. When price comes back to the breaker block, you put your stop loss above the block and then you aim lower. That means when price comes up here, this is your entry and you intend to take your profit at the lows here. Your stop loss will be above here. Now this old breaker block is no different from a break and retest. Put in the comment section if you agree with me or not. Okay, put in the comment section. Before you start spitting out fire in the comment, just listen to what I have to say. Okay, now in a typical break and retest, this is what you have. You have an upward move, all of a sudden price break. The retail trader will wait for price to retest this line here. They call this what support turn what resistance. So when in their own case, this is what they do. With the retail logic, they simply place their entry here, stop loss above this. Okay, stop loss will be above this high, and then when price comes back here, this is where they intend to take their trade and they aim for probably another form of what support. Now this is a break and retest. Okay, break and retest. It is nothing new. Okay, so when you are trading your breaker block, it's simply a break and retest, just like the retail concept. Okay, and that's why I said SMC is retail but with an edge. Okay, it's simply a retail concept with an edge. Why is this an edge? Because in this case here, look at this move here from here to here. The trader that trades the retail concept, let's assume this is a win-win. Let's assume this is a win-win situation. The retail trader here will simply have what, a 1.39 what risk to reward. Okay, but a smart money trader entering here with stop loss above here simply have what, 3.571. But the whole concept, the ideology is the same. It's just that one has an edge over the other. Okay, this is a break and retest. Price move above, break the support, comes back to retest it. This is the entry for the retail trader. Put in the comment if I'm wrong, and also smash that like if I'm right. Okay, but for the smart money, because they understand that this push, according to smart money, was manipulated. Okay, so therefore when price comes back, it needs to mitigate Okay, this breaker block is also your order block. This is also an order block that got broken, retest. I will come back to that. But the breaker block is simply a block that what took this high, then when it's broken, you trade on the breaker block, the last down candle before this push up. That is your breaker block. Okay, so in this case, your stop loss above, your take profit at the low. The smart money trader will take some partials at this low and probably allow some to move, but a retail trader do not know where to come out of this trade. Instead, they aim at another support zone. That is where they take their profit. Okay, so because you trade smart money doesn't mean you are trading something new. Okay, you are just trading a refined retail concept. Okay, I know a lot of smart money traders will be bashing at me right now, but I trade smart money, so you can go ahead. This is just my opinion. Okay, now let's look at the breaker block and the order block, the most widely acclaimed order block. Okay, an order block is simply a deceiving move up. Okay, let me explain this. The move from this to this point is the order block. Okay, it could be a series of 3 candles, it could be 2, it could be 5, whatever it is. It simply means this move that deceived buyers into buying this market here, and then all of a sudden we have a push down. So the order block is simply from this point here to this point, from this point to this point. Okay, I'm going to show you all this on the chart. Okay, that means, but what we smart money traders do is we refine it. We refine the order block to probably the last what. You do this because you want a better risk to reward, just as this breaker block, you have a better risk to reward. But the retail trader, once they see this is also a break and retest. This low has been broken, a break and retest. So for the smart money trader, okay, let's make it as easy, as simple as this. They wait for price to come up in here, touch the last up candle, and then their profit will be this low here. So now let's put our short tool, short position, and let's see. So in this case here, you can see here you have a 1 to what 4.37 hour, 4.56 hour. Okay, this is what the smart money trader will be saying. But the retail trader will see this as what a break of what support, a break of support. So what they do is, this is what retail would do. Retail traders, those that trade the retail concept, okay, when this line gets broken, they see it as what support on resistance. Okay, and this is where they enter the trade. Okay, they enter trade there and aim but lower. Now the smart one among them will always put their stop loss at the point of invalidation. Okay, stop loss, you place your stop loss at the point of invalidation. Okay, and then price trades lower. Okay, now once the retail traders are already in here, the smart money concept might wait for the order block to be tapped in before they move in, and sometimes they might miss the trade. But the retail trader will not miss this trade, because when price trades back in here, it will put them in the market. Okay, now the problem why some retail traders lose is that they do not understand the point of invalidation. Instead, they just count some few pips above this line. They count some few pips above this line, so that most times price comes, do something like this, okay, and take them out before moving what lower, and they will start complaining. Okay, if you're a retail trader, always understand your point of invalidation. It will help you a lot. Or you just simply try to learn this smart money concept. A lot of people are batching smart money concept that it doesn't work, is a myth. Well, it does work. It's just that it's a refined retail ideology. Okay, So that is that on the order block. Now let's look at the mitigation block. Okay, mitigation block is simply price move up, fails to break this high, okay, and breaks. Okay, this is a mitigation block. So the last down candle before this move up will be your mitigation block. Okay, will be your mitigation block, and this is how smart money traders trade this. They enter at the touch of the mitigation block, okay, and then stop loss above that block, that candle, and they aim lower. Okay, they aim lower. This is mitigation block. This is all also a break and retest for the retail trader. So as you are seeing this, the retail trader also are seeing this. Okay, but the approach to the market is different. So a retail trader will see a support broken. Okay, they will see a support broken and a new trend forming. Okay, they only trade on a line. Okay, they wait for price to tap this, a retest. This is a breakout. Okay, breakout strategy, a retest of this. Okay, when price touch this, they decide to go short. And in this case now, where will their stop loss be? The stop loss will be, some will place it above here, okay, some might put it above here, okay, wherever it might be, they can put above this because they are looking for a continuation, I mean reversal of a new trend. Okay, a new trend is being formed and they can take that profit at the next support line. Okay, you can just switch this for a bullish play. Okay, I already gave an example for a bearish play. Your order block is just a refined break and retest. The breaker block is a refined break and retest. The mitigation block is a refined break and retest. Now let's look at the almighty change of character. I did a video that retail also trade chalk. If you can't see, check the card up here. You will see the video, but watch this to the end before you go there, or you can check the description. There's a file layout, okay, and you can pick that video and watch after this. So retail also trade change of character. A change of character in this case is price was moving up. All of a sudden we have a change of order flow. Okay, just as the smart money trader saying this, the retail trader also are saying this. They see this as a change of structure, shift in market structure. Okay, now how do they enter this? They wait for a retest. That's their confirmation here. They wait for a retest, and they take the price lower, and then in this case their stop loss will simply be above that high. Okay, it will be above this high. Okay, while the smart money trader will just simply wait for probably an order block up here. We wait for an order block up here. Price taps in, and that is the entry. Okay, sometimes the retail trader can just wait for a bullish engulf and the rest in order to take that trade. Okay, from that video I showed you that your bullish engulf, bearish engulf, morning and evening star are simply a change of character. Okay, looking at one particular candle, price action. Okay, so it's nothing new. Whatever you see in this trading world is nothing new. Okay, I can decide to rename this chalk, give it something else. If I have a large following, before you know it, it will be adopted in the market. He who gets the largest following dictates the name of the game. Okay, they can change this order block, breaker block, mitigation. When I sat back and look at it, there is no difference between these and simply a break and retest strategy, which has been tactically refined. And it's a good thing. Okay, it's a good thing, because when you apply SMC in your trading, if your trade becomes successful, you are going to come out with a very solid risk to reward. The minimum you can get is 5R upward. Okay, why the retail traders might be aiming for what? Maximum of 1:3 ratio. 1:3 risk to what? To reward. Okay. Now someone will say, what about the trend line, the support and resistance? Okay. Now this is why the SMC is different from the retail concept. Now with the trend line, because I read baby pips from beginning to the end when I came across it. Then not that when I started, when I came across it. Now in baby pips, if you have an upward trend line like this, for example, what they teach is that when price break this, wait for the retest, and then your target will be at this low. If I'm wrong, please put it in the comment section. Then I think I'm very correct. I know my drills. Okay. When it breaks this trend line, they wait for what? Retest. See the break and retest strategy. Okay. When it touches back on the trend line, that's where they entered. Now, where most of them get confused is where to place the stop loss. If I'm speaking your mind as a retail trader, put it in the comment section. Many of them do not know that they need to put the stop loss above this. This is the point of invalidation. Okay, and only if this created a break of structure. But sometimes they don't wait for that to happen. They only look at the trend line. Now let's give it the benefit of doubt that this also led to a break of structure, and let's look at how smart money will enter that trade. Okay, so they might count maybe 10 pips, 20 pips, 30 pips, 50 pips, depending on the time frame they're looking at, and put stop loss above. But let's assume that okay, they place the stop loss at the point of invalidation. Now the stop loss, they will hold this trade for some days because they might enter this on a, what is it called, daily 4-hour time frame, whatever time frame it is. So once it retests, let's give this a win, they take profit at the low. That's what the textbook teaches. But as a smart money trader, we know that these lows here are simply what? Liquidity. These lows are liquidity. Okay, so we understand that once we have a change of order flow here, like for example, the smart money trader will simply identify an external what? POI. Okay, where when price gets in, this is where the smart money trader will be waiting to what? Enter that trade. Yeah, wait for confirmation in lower time frame and then take the trade lower. We are still seeing the same idea, just that the smart money trader enters early, and their goal, they have a logic that these are liquidity, the price should come to and clear all this liquidity. Still the same. Okay, why the retail trader see this as a break and retest, and their goal is also to clear this liquidity, but they don't call it liquidity. They just say, okay, you take profit at the end of the trend. Okay, two different things, but the same. If you look at it, they're the same. So let's look at the chart and see how retail and smart money traders will have approached this market. Okay, so let's see. I want a very easy stuff here. Now let's look at this, for example. Here, the retail trader will mark this as what? Support. Okay, immediately price passes through this and comes and to touch this is their entry. Okay, this is where they will enter the trade. Okay, and probably the stop loss, depending on the kind of trader, they can put their stop above this high, or they can place it here for a break and retest, and then probably they look to the left and take profit at the nearest what? Support. Okay, let's assume they place their stop loss here and they might take profit here, some profit here, because this is next support here. Okay, this is what they might do. Okay, and in that case they end up with 1.2, or if they look to the left and see another point of support, they can enter the trade there. Now that is the retail concept. Let me put this aside. They are still making money. They might not be making 10-hour, 50-hour, 100-hour trade, but they are making money if they understand that the direction of the market is going lower. All you need to do to be profitable in Forex is to know the direction of the market. The moment you get the direction right, how you enter, either you are using retail concept or smart money concept, do not matter. Because let me tell you, the moment your direction is wrong, your fancy order block strategy will not work. Okay, you'll simply be against the market. The order block will be pierced through. Your breaker block will be pierced through. All the form of liquidity may not be respected. So the number one thing as a trader, be it a retail trader, a smart money trader, is for you to understand the directional bias. Every day I try my best to refine how I understand directional bias. I try to get the directional bias right, because whenever I get it right, that day is always beautiful. You have lesser losses, you always have winning trade. But the moment you are looking for what? A buy here, price goes up and then stop you out. Now for the smart money trader, they will see this what as a zone where they might be entering. This will be a POI in form of what? Hidden base. Then they move to the lower time frame to get their entry. So their entry in this case, they might enter this trade somewhere here with a stop loss above here. Okay, or let's just say without confirmation, they just entered at this level here. At the end of it all, both retail and smart money traders are in profit. It does that in this case, the smart money trader is banking what? 8 RR. Okay, so I'm inviting you, if you're a retail trader, try this concept. Don't bash any concept. Okay, come in, do a kind of back test. Okay, check if whatever they're saying is right. Because why I agree with the smart money traders is this, because it makes me have a better understanding of the market. The way I teach this technique here is because I understand. The moment I came across it, I just understood it. Okay, but do not let anyone tell you they are the pioneer of it. It's not. It's simply a repackaged stuff. From what I can see, I don't know, you can bash me if you like, but it is simply repackaged. But whoever repackaged it, kudos to you, because you have made it easier, okay, easier for traders to be profitable. Okay, so that is all I want to show in today's video. If you are interested in understanding smart money concept, this next video will be for you. I will see you in that video.